Hello everyone, this is Si-Wing Yi. Welcome to another segment of this audio video recording. And today's topic will be uh, the numerical formula uh, to achieve credit success. Do you know what this formula stands for? 35, 30, 15, 10, 10. Your ability to solve this formula can make or break your credit and financial future. So let's go over the details of this numerical formula. 35% is payment history. 30% of your FICO score is outstanding debt. 15% is length of credit history. 10% is credit mix. And 10% is search for new credit. FICO score range is 300 to 850. Again, my name is Si-Wing Yi, owner of Integrated Financial Solutions. My background is I've been working in the credit repair business since 1991. I was trained and mentored by former Chief of File Security at Experian, formerly TRW, and I have analyzed more than 60,000 credit reports. I have personally seen deletions of tens of thousands of negative entries from clients' credit reports, and I have helped more than 20,000 consumers in the past 2 decades in restoring their credit. So let's go over the payment history, which is the largest percentage in significance with respect to your overall FICO score. So what is your track record? Approximately 35% of your score is based on this category, your payment history. Basically, this 35 payment history, 35%, are pretty much on the categorized under like your past credit accounts. Have you paid it on time, right? Do you have kind of public record collection items? How many accounts with derogatory information do you have? So this is the biggest piece of the pie. Really, it emphasizes if you have tremendous payment history on time for many years, then you will maximize this 35%. However, like many people out there in the country at this moment, because of this economic crisis, many people have gone through some very significant financial issues, crisis, and many people have filed bankruptcy. A lot of people have foreclosure on their record, and many people have other negative items. For example, people lost their job, or have reduction of earnings, have medical situations, and unemployed or whatever. Those life crises will cause people to fall behind on their financial obligations. As a result, the negative credit is, obviously will be affected. So again, this 35% category consists of negative, primarily negative information, such as bankruptcy, foreclosures, short sales, late payments, collections, charge-offs, student loan default, judgments, tax liens, and among those kind of things. All right. So very significant piece of the pie. If a person have the ability to restore their credit, clean out their credit, then this 35% will be very important. The second numerical formula will be the next in significance, which is a 30%, which is outstanding debt. The question is, how much is too much? What's the balance owed on your accounts? How many accounts do you have that have balances? What percentage of installment loan do you own? What percentage of revolving credit line is used? So this outstanding debt category, which is again 30%, is very significant. So, for example, if you have a credit limit of $5,000, if your balance is $2,800, you're pretty much maxed out, right? Those are a very risky situation. So it is affected to that end. If you have a high credit limit, whether it's a mortgage loan of, for example, $300,000 limit, or whether it's a car loan installment debt of $20,000, it'd be nice over time if you have the ability to pay it down. If your mortgage loan about $300,000, if you have a balance of $50,000, so the relationship of credit limit to a balance is very, very low, which is good. Similarly with a car loan, if you have a $20,000 car loan listed on your credit report, if your car loan balance is $3,000, then the ratio of credit limit to balance owned is very good ratio. And finally, on a revolving credit obligation, such as a credit card, for example, if you have a credit limit on a credit card on a for of 5,000, and then if you have a very low balance like $50, $100 per month, and you pay it off on time every single month, then this is a good situation. Your credit limit to ratio, a balance due, is very, very low. All right. So again, improving your FICO score is understanding the formula that I'm sharing with you. All right. The third category is the length of credit history, which is the 15% of your overall FICO score. The length of credit history is based on how long have you had those accounts, how long has it been open, okay, and above all, so it takes time, right? I mean, if you are a young person, just graduate out of college, you may not, because of age, you may not have significant length of credit history, but over time, if you get older and you establish credit for longevity purpose, pay back on time, and therefore for the next 5, 10, 15 years, if you continue to pay on time, and over time the longevity credit history will maximize this particular category, the 15%. All right. The fourth category is credit mix, which is 10% of your overall FICO score with respect to this formula. So what is the healthy mix? So the credit mix is basically determines the mix of open, installment, and revolving credit accounts, to include retail store cards, finance companies, mortgage loans, Visa or MasterCard, those kind of things. So if you have a combination of, if you have a couple of mortgages, right, and then pay on time, of course, hopefully low balance in relationship to the credit limit, some installment loan, car loans as well, and then 3 or 4 credit cards or revolving debt. Those are the nice diversification. They'll give you a healthy mix. All right, so that's important to have different type of installment and revolving debt. If you can maximize this category, it'll give you another 10% towards your optimization of your FICO score. Okay, and the fifth category will be search for new credit. Searching for new credit is, again, it's a 10% of your overall formula of your FICO score. It's basically search for new credit means how many new accounts have you opened, how long since new account has been opened, how many recent requests for credit inquiries, right? How long since your most credit report inquiries. So you certainly do not want to apply for too much credit in a narrow time frame, like within 36 to 90 days. You don't want to have 10 inquiries, right? You don't want to search for a car loan, for 10 times in the space of 1 weekend. You don't want to do that. You don't want to apply for credit card all of a sudden, but within 30-day period, that's fine. If you will look for a mortgage, if you can find 4 or 5 different lenders within the 30-day time frame, you're okay. You're not gonna, the inquiry is not gonna hurt you. So spread out your search for new credit over time, over a span of 12 months. Systematically. Don't bunch up all at one time. So if you have the ability to do that, spread it out. Just apply for new credit in a judiciously over time. Then this 10% formula will again increase your FICO score. And interpreting your FICO score, when you look at your credit report, you will see the technical codes, 032, 612, 834, whatever, 946. Those are technical codes that you kind of need to understand. Credit score are reduced by the reason code, and the reason code will explain why your FICO score is what it is. It is not higher than it needs to be. So example of when you look at your credit report, you will see the numerical codes. They will tell you, explain why. The technical code 24 means no recent revolving balance. 08 means too many inquiries in the last 12 months. Technical code 38 means serious delinquency and derogatory public record over collection file. Code number 18 is number of accounts with delinquency. Code number 34 is amount owed on delinquent accounts. So as you look at this reason code, then as a consumer, you need to put in the effort to resolve this reason codes. For example, no reason revolving balance. Well, establish good credit. Apply for credit where you can have revolving balance, right? And too many inquiries in the last 12 months. Well, don't apply for too much credit beyond the 12 months, right? Minimize that. Serious delinquency or derogatory public information, that means bad credit. Well, do something about it. Pay off the debt, dispute the credit bureau, cause the deletions of those negative information, wait in advance of the credit law, which require you to have bad credit for 7 to 10 years. Don't want to do that. Don't want to wait. You need to do something about it, right? And correct this deficiency. Number of accounts with delinquency. Again, do whatever necessary. Apply the credit law. Apply the Fair Credit Reporting Act. Ask for our help. We can help you delete, dispute, and challenge and delete those negative items, so you could lessen this type of derogatory information. Okay. So at the end of the day, you have three options, everyone. Number one, do nothing. Wait until the statute of limitation runs out, which is 7 to 10 years. I would say this is not a good option. Do not do nothing. You do nothing, it'll take too long for you to recover on your credit. There's no other ways about it. Number two, do something about it. Can you do it yourself? Do you have the time, the knowledge to clean your own credit? Suffice to say, I would say no, right? And the third option is hire a credit repair pro, which is hopefully us, Integrated Financial Solutions, that has been doing a great job for many, many years. Those are the options. So I hope you can do the three options. Doing nothing is simply not a good option. Okay? For more information, please contact my name, Si-Wing Yi, credit consultant, area code 510-552-0726, and my email is siwingyi@integratedfinancialsolutions.com. Thank you for listening to this short audio video, and we'll continue to do this kind of audio video over time, so I can educate consumers out there in these very challenging times, and help you to really restore your credit future. Thank you very much for listening, and talk to you soon. Thank you. Bye now.